Thank you so much for joining me today. It's great to have you on the podcast. I want to just start with kind of an introduction about yourself and Fundingo.
Absolutely. Hi, everyone. I'm Henry Abenaim, the founder and CEO of Fundingo. I come from the lending industry. I've experienced firsthand what it looks like to have hodgepodge of different systems managing a growing operation and set out to solve for that for the industry. And looking forward to exploring that with you today more.
Awesome. You mentioned just now that you started at the lending space, but you've also done Salesforce implementations, consulting, and a lot of that before going into Fundingo. The question I have is what's the moment you realized you were building your product, not just consulting?
Yeah, so we had a client was co-designing an entire system with me, and we were originally going to build it for him and potentially license it for the industry. And the capabilities that this client needed was a lot more than his budget allowed. At that time, it was big for a small lender. It was like $400,000. He turned it down, and I got disappointed for 5 minutes. Then I said, okay, let's see. Maybe we actually have an opportunity here. And we had other lenders that came to us and said, we need these capabilities. And I was like, oh, those are the same capabilities. So, and they were willing to pay for it. So we went and built some pieces of it, and they were ready to pay for those pieces. And then we got some friends and family money and built it at every step of the way. It wasn't all at once. So it's
Right.
like sometimes the door closing in your face is telling you you're in the right place for some opportunity.
And I think you just mentioned the number one thing with any system. You build it in pieces because, well, this piece is needed right now, and we can get it to the market right now.
Absolutely.
And I remember when we were talking earlier, you were talking about a wire transfer that got fat fingered. I remember that being a catalyst for you.
100%. It was a catalyst.
What happened, if you can share?
Yeah. So before starting Fundingo, I worked for a lending company, like I said, a small business lender that was growing really quick. And I was at that point, I was in the role of underwriting and funding. And I fat fingered an extra zero in a wire transfer to a bait and fishing shop in Montana going into their 2 months busy season. Then the rest of the year, they basically do no money, no business. And we never saw a dollar back. Why was it a catalyst? Because I thought I was going to get fired. I wired out 10 times the amount I was supposed to send. That's significant money, unrecoverable. And I was like, you know what? Something has to change. There was really no controls. It was a spreadsheet where I entered it with an extra zero. There was no system of record. And it just left a huge imprint in me that we need to put in controls. And that's what we did. We started building out software on Salesforce to have controls around wire disbursements. It had approval process and it had validations of what you put in. And it was like we made it not possible to make that same mistake because it would compare it against other data points and it never happened again. And that was definitely a big catalyst for me on the power of a system of record and controls for that industry.
My reason for loving that story so much is I had a similar catalyst in my own experience. It wasn't me, but I was the one responsible for what you ended up doing in Salesforce. Somebody fat fingered an email address with a customer invoice, all of the contract information going out to a different customer.
Yep. Those are not fun.
They're not fun.
And when you're doing it multiple times a day, that same process, and you see that weak link, you gotta do something about it.
Yes. And I can't even blame the person who does it. It's bound to happen.
Absolutely.
You've mentioned that dirty data isn't always the issue in companies, not the real issue. It's the lack of controls. I think I can argue both sides of that statement. So yeah, I'm curious how you unpack it.
Dirty data is a problem. And honestly, AI today makes it less of a problem because AI could read and make a lot of intelligent logic out of data. What you can automate away is a lack of control. Clean data won't stop you from wiring the wrong amount, approving the wrong loan, or giving someone access to information they shouldn't have. Controls are really the human guardrails that sit on top of data. And that's where lenders and similar companies in the financial services industry are most exposed. And that's what Fundingo was built to solve.
Okay, how do you solve that?
100. So dirty data has to get cleaned. That's for sure, right? But when you have this control issue, the way we solve it is we understand what would be a quality control on the next step. So if you're moving a loan from step one to step one may be an application, step two may be an approval. Before an approval goes out, what would the most senior person in the company ask and check? What would that checklist have? And then put a control in place so that before it even goes to the next step, it already runs through and has those validation steps occurring in the system.
Got it. So basically, you're doing the thing that in a finance world, we always tell people before going to their managers. What question is your manager going to ask you? Have
Exactly.
those answers already laid out. Love
And
it.
then sometimes you lock the system down, right? You don't want it to be, it's always a balance, right? The more you lock, the more challenge you may have with user adoption. But what you could do with locking the system is who should have permission to press that button? Who should have permission to mark a loan as funded? Who should have permission to approve a loan? And you could set those permission levels with different tiers in your software. And then you can learn from what's going on and make that stronger and better. That's one angle of it. But those are things that start becoming possible once you run you really have a system of record and you're running an operating platform.
Yeah, I think system of record is always the number one point. And I think we've also talked about the problem that around Fundingo. It's a lot of duct tape. Before Fundingo, what does a lending stack usually look like?
Yeah. So if the word duct tape, I think you're picking up there is what we would describe a bunch of systems duct taped together.
Yes.
And one client, for example, was a financial services client, had Oracle for accounting, an AS400 green screen for loans, multiple spreadsheets, and a few commission systems all duct taped together. Some data was being manually exported and imported nightly, some ran via API, but every time they wanted to roll out, let's say, a new loan product or even a change in how their program should run, that they would always get a response from their IT team. No, we can't. We can't. You move one brick and everything collapses, right?
Yes.
So it came to Fundingo and consolidated into one platform. And that's not unusual. That's what we do all the time.
I yeah. Uh, So it really is the hey, we're a lender, and to survive, we have all of these systems, but because Fundingo exists now, we can go talk to you guys and pull it all into one.
When you have all these systems, not only is the controls an issue, it's very difficult to grow and scale. Like you think about hiring a new employee, you got to teach them 6 systems.
Yes.
And then they make mistakes and it takes a long time on board. Meanwhile, your competitors have a single system. They're hiring better talent, they're onboarding faster, they're moving quicker.
Yeah. And without having to teach someone 6 systems, they don't even have to hire the better talent. They can hire the cheaper talent and have better
Yep,
results.
absolutely. Yep, it definitely increases capacity.
Since starting Fundingo and just your career in general, what's a lesson that you go back to and would tell yourself in your earlier days?
I think one of the biggest lessons is the focus, narrow to grow. Early on, I thought a wide net caught more customers or a wide net would cover more capabilities, would be more attractive. And what I learned time and time again, cycle and cycle again, and the hard way, is a wide net catches things you can't serve well, and it's not scalable. The companies that compound and grow fast are the ones that go deep on one problem for one customer type, and then Once they do that so well, better than anyone else, then they can go and win something else and take from that beachhead, go grow from there to the second type of customer, to the second use case. And when you do that, what happens is, which happened with us too when we started to focus, is customer B sees what you did for customer A or what you've done for customer A and says, wow, that's exactly our use case. That's exactly what we need. I feel at home in what you're describing. That's when the flywheel starts to spin. And so focus, I would tell myself, focus and narrow is not a constraint. It's actually a growth strategy. That's a big lesson that took a while to learn.
I think that's a big lesson all of us have to learn. And I think the only way that we end up usually learning it is the hard way.
Absolutely.
We've talked about AI a little bit. Where would you draw the line between something that's helpful versus over trusting a language model?
Absolutely. So I think one thing for sure is you don't want to give the AI the full decision making capabilities. AI is probabilistic, not deterministic. You want AI to talk to a customer, it absolutely can do that. You want AI to run some logic, it absolutely can do that. AI can do so much, so many capabilities, but it's not going to replace the human judgment on a $30 million loan. It just won't. What it will do is it will augment the judgment. So what may take hours to make that decision and go through the data could be minutes now. What took a while to scrub PDFs, minutes. So AI is doing a ton, but it's not going to replace very important and expensive judgment calls. It will augment.
I agree. At least from my experience in the not lending, but finance business in general, AI is your tool to help people do more. It's not your uh, end all solution where it's like, oh, this will close our books this month.
Absolutely. The other thing I hear a lot from our customers is they're concerned with uploading their data to just any LLM. And what does that mean, right?
Right. I've recently heard a story of someone uploading their entire tax return to OpenAI.
Yeah.
It's one of those situations where it's like, oh, you you did that now.
I
Yeah,
mean, and it scrubs it in a second and tells you the results. It's powerful. There's a reason to do
it's
that. You just got to be careful with yeah, how you do it.
there's a reason you do that, but there's also a reason not to do that.
100%.
Um, a lot of lending, you have your manufacturers, retailers offering financing at the point of sale. How do you see Fundingo and the future of that affecting that type of lending?
Yeah, so we call that embedded lending. It's actually a really exciting area. Embedded lending would be you go to your manufacturer, you're going to buy a swimming pool or buy a piece of equipment, and the manufacturer says, we could finance it. Instead of paying $50,000 today, you could pay us over 3 years. And then the sale goes through faster, easier, lower friction. So embedded lending is going to become the default, not the exception, right? The old way was the borrower, the buyer, would become a borrower with a bank or go to some lending institution and try to find financing, $50,000, then come to the manufacturer and buy the equipment. It's going to become the default where the manufacturer will offer the financing because in a way, what stopped them before? The barrier used to be expertise, infrastructure, probably top two, right? And both are dissolving. AI is making underwriting smarter. Platforms like Fundingo are making operations more manageable in the lending operation space. So now a pool manufacturer or a boat dealer or a medical equipment company says, one second, why am I not offering the financing directly to my customer? Why am I letting this other lender start a relationship with this customer? Number one, I'm losing the continued relationship. Maybe the customer will buy more over time. Number two, there's revenue there, another line of revenue. So it's like a win-win-win. So, financing increases their ability to sell more. It adds revenue. It deepens the relationships. And I think with AI, it's going like from 60 miles an hour to 600.
That's fair. I guess a question on that statement, though, is For certain businesses, it makes perfect sense, but like your pool manufacturer that you mentioned, how do the companies mitigate that risk? Because it's not like if I manufactured a pool and gave it to my customer, I can just go out there and dig the pool back up.
Yeah, so you do get a lien on the property. You're absolutely right. There are some cases where the lien can't be necessarily on the pool itself, right? But you need some type of security in some cases. In other cases, you take on higher risk and you charge a higher rates. So there are different mechanisms. Obviously, this is the good old lending strategy. You either
Right.
get lower risk, lower rates, higher risk, higher rates.
That's fair. I just feel like historically, banks have been in the position to take that risk. And are we seeing more manufacturers, retailers being in the position to take the risk? And I don't mean the giant companies.
Yeah. No, no, even the smaller companies. The reason they're in a position, they don't need to use their own operating capital. They can get a line from a bank, a credit line, they can get a fund investment. They could even share the risk. They could have some institutional investment investor pool that goes in 50% risk on every deal or guarantees the loan. So there's many different tools there to make them be able to take on that risk.
So then closing this out, for a founder sitting where you were pre-Fundingo, what advice would you give them?
The biggest advice is from my personal experience, and that is if you're sitting in a situation where you're either consulting, you're freelancing, you see that you're doing something that could turn into a product idea. Don't wait. Don't wait for the perfect spec and the perfect investor and the perfect launch pad. Start building a prototype. Especially today, you have AI, you can do that so fast and show it to customers. Get them to pay something for it. And if they could pay something for it, you have a validated demand, right? Just don't wait. Start small, get some feedback, and then grow from there. It's the world I've lived in and seen really opens doors. And instead of sitting, everyone out there sits on great ideas. Instead of waiting, just start doing.
It's the age old, you're waiting for the perfect timing, and there never is the perfect timing.
Exactly.
Awesome. So, where do people find Fundingo, and who's the best person to reach out to you?
Yeah. So, first of all, you can find Fundingo on our website, fundingo.com, or on LinkedIn. Find to reach out to me, Henry Abenaim. There's not many Henry Abenaims out there. Our sweet spot is a lender who has outgrown their current setup. Maybe they have a platform, but half of their team works out of spreadsheets, or they've outgrown something and it's growing and they can't continue to operate that way. I would say, as far as a sweet spot, you obviously have to be doing a volume of loans where that pain point really matters to fix it, right? And starts costing in terms of headcount, errors. So, community development lenders, small business lenders, commercial real estate, bridge lenders, specialty finance, any lender where they have loan products that are complicated or complex enough that an off the shelf software never quite fits. So, if it sounds like you, reach out. I'd love to have a conversation.
I'd love to see people reaching out. Thank you so much for your time today.
Absolutely. My pleasure. Thanks for having me.